So hello, thanks Olga. It's going to be hard. I'm not going to be as inspirational, I think, but I'll drill back down to the basic of how do you define the price of a security, and this is important in the context of cryptocurrencies. So by means of introduction, my name is Ambre Soubiran. I come from the traditional financial industry. I was an equity derivative structures for about a decade until leaving for cryptocurrency, and I am now running a company called Kaiko, where we provide cryptocurrency market data to different types of market participants. So just a little summary of what I'm going to talk about. I'm going to talk about just price discovery, what it is, why it's important to have reliable market data. I'll drill back down to the basics of what is order book data, what is price data, how are trades executed, and how is the price setting mechanism done on exchanges. Why do we need it, how do we use it, and how do we currently access it? So how does the different market participants currently access and use market data? And I will finish by talking a bit about Kaiko and how we're trying to solve some problems for our clients. So first of all, price discovery. So price discovery is just the central function of any given marketplace, and it's the process of setting the right price for an asset or a service or a security. It just involves, it's a very typical economics concept that involves finding where the supply, so the sell orders, meet with demand, which are the buy orders. So you have supply and demand curves, and when they intersect, that is where you set the price. So cryptocurrency exchanges, this is currently where cryptocurrencies are traded. You also have, over-the-counter markets and different markets that are not publicly traded, but let's just focus on crypto exchanges for now. Cryptocurrency exchanges are there. They bring buyer and sellers together, and buyers and sellers can interact by placing orders on the markets. Then you have an exchange matching engine. Matching engines is some kind of algorithm that automatically matches buy and sell orders. And this effectively generates trades or transactions. So these executed transactions will represent at any given time the consensus price, the price at which securities are bought and sold, and people agree that, okay, this is a fair price at which someone is happy to sell, someone is happy to buy, and we consider that this is then the fair price of a security. And it's used as a reference. It's used as a reference in many different things, and pretty much every market participant in the cryptocurrency market will need a reliable data feed. So investors need to take buy, hold, sell decisions. They need to know what is the current price, what it was yesterday, and they need to be able to run strategies on price data. Startups, I don't know if you invest in cryptocurrencies, you want to know what's the value of your portfolio, you might use an app, an iPhone app. Those people need third-party data feeds as well. Smart contracts, we're getting more and more smart contracts that need to have a reliable reference data to be able to automatically execute. This is super important because it will then trigger other automated execution of different types of contracts. Regulators need to keep an eye. We talk a lot about fake volumes, about wash trading, so it's also important for generally regulation, auditability, what happens on exchanges. We need to have a view on volumes and price. And there are a few methodologies now that are being used by regulators and by people that are trying to identify real volume versus fake volumes. This is a problem within the cryptocurrency exchanges right now. And of course, academia, you have a lot of people that are currently doing research, trying to do machine learning and artificial intelligence on cryptocurrencies, and those people need very granular and reliable data. So generally, data is important, market data is important because it's price data, and this is how we understand how assets are valued. So in the digital asset space currently, it's relatively unstructured. All exchanges do provide access to their market data and to the transactions and orders that are placed on the exchange. However, it's currently not standardized. There are different ways to connect to exchanges and to obtain this data. And the data you gather then is not standardized across exchanges. So gathering data from different marketplaces, you're going to get different formats. And it's just harder to consume then from whoever you are in the market. It's harder to consume. So I'm going back a bit to what types of market data are we talking about. So order book data is information that shows all the outstanding orders that are placed on markets, and it shows the general depth of the market. So here on the left side, you see the bids, who wants to buy and at what price. So this is cumulative, of course. So whoever wants to buy at 7.400 K is happy to buy at a lower price, of course. And then whoever wants to buy, to sell is the same thing. So the ask is the sell volume, and whoever is happy to sell at 7.7 is happy to sell at a higher price. So this represents the structure of the market. In this specific example, this is an example of a snapshot, so a view of the order book on Bitcoin Tether, on the exchange, cryptocurrency exchange called Binance, on a specific day, 1st of August at exactly midnight UTC. So this just shows at that specific point in time, how does the market look like? Where is the volume? At what price are people willing to buy and sell this specific asset, being Bitcoin against Tether? So at the intersection of the demand curves, so the buy and the sell orders, you have a specific sweet spot, which is where buy and sell order intersects, and this is where transaction occurs. So if we zoom in into the middle region where the intersection of the bid and asks are, you get this. So this is executed transactions. This is where buy and sell orders execute, and the line that I've highlighted in yellow is just exactly where the buy and sell order crosses. And you can see that it's executed at the price at which they were crossing. So then this is a zoom out of the entire transactions that have happened over that given day. So we're still in the same time frame. And although this kind of updates every millisecond and gives you an idea of what does live prices look like, history, all the transactions executed gives you a tool to be able to draw historical prices and charts. So this is just 1 day of trading. You can see how price has moved during the day, and the gray lines in the bottom are volumes. So going back to the data, for every given trade, you have quite a lot of information. You have a millisecond level timestamp. You have a price at which the transaction was executed, a volume for which this transaction was executed, a trade direction, and different metadata on the exchange and the pair. So how do we currently access market data? So currently, exchanges have computer interfaces, APIs, WebSockets, different ways to deliver data for a computer-readable format. Right now, it's still relatively technically challenging. It's easy to get data for 1 or 2 exchanges. It's hard if you want to do it at scale for multiple pairs of crypto assets. So as I said earlier, there's no standardization. There's different types of data formats, and there's also no standardization in the way exchanges name pairs of crypto assets. So if you're looking for just simply Bitcoin, Bitcoin may be labeled differently across different exchanges. There are a few initiatives out there that are looking at centralizing and normalizing different types of data. So market data is not the only problem. We have the same thing with reference data on projects, token allocation, projects, who is leading, teams, everything. This is something that is currently quite cryptic and provided through various data sources. So I run Kaiko, and Kaiko is a company that covers the market data part of things. So what do we do? We're connected to all the major cryptocurrency exchanges, all the regulated ones and the ones that trades fiat currencies especially, and we provide a normalized data feed for different market participants. So we gather data, we're connected to all the exchanges, we normalize this data under a proprietary data format that we have, which ensures that the data is consistent across all pairs, all history, and exchanges. We deduplicate the data. I'm not going to go into that, but basically we over-collect data to ensure that there's no gaps, and then we remove duplicates. We store this data, and then we deliver it. So we have different ways of delivering it, depending on the use case that you have for the data. We have something called the data feed, which is a push on a cloud provider, which is generally used for academia and for people who need a large amount of data. We have our own REST API, which is optimized for high availability, where people can query any historical data and get a return in a standardized, normalized fashion. And we have a live stream for people who need to know exactly what's going on at a low latency. So what we do is basically for anybody that needs access to market data across various platforms, they can just integrate with one endpoint with us and then get access to all different types of assets. So we cover over 6,000 different exchange pairs right now. So that's what we do. And this is, if you have any questions, I'm also going to be here for the rest of the day. So if at any point you want to discuss market data, if you're a startup, if you're an investor, if there's any consideration that is something we could assist with, please reach out, and I would be very happy to discuss further. right. Thank you very much.